Welcome to today's What Moved the Market show. I'm your host Prem. It's Tuesday, December 23rd, 2025, and here is everything you need to know as the markets close for today. The Indian equity markets ended the day trading flat, offering traders a mixed narrative as indices treaded water ahead of key macroeconomic data releases from the United States. The Sensex shed 42 points or 0.05% to close at 85,525, while the Nifty 50 advanced just 5 points, finishing nearly unchanged at 26,177. The BankNifty reflected similar hesitation, closing at 59,299, down 4.45 points. The session was characterized by profit booking in index heavyweights, amid an otherwise choppy trading environment. Traders remained cautious as global markets await the US GDP and PCE inflation data that could reshape expectations around Federal Reserve rate trajectories. Despite the flat close at the headline indices, underlying momentum in select themes provided pockets of strength. The rupee held steady around the 89.55 level per US dollar, reflecting a marginal appreciation, though traders kept a watchful eye on potential volatility as USD strength tested limits globally. On the stock-specific front, the day revealed a clear tale of two markets. Coal India emerged as the Nifty 50's top gainer, surging 3.73% to close at 400.65, riding momentum in the metals and energy space. Shriram Finance gained 2.42%, while ITC, Ultratech Cement and Tata Motors passenger vehicles rose around 1 to 1.5%. In the small cap space, Jupiter Wagons was the star performer, jumping 7.91% to close at 335, while IRCON added 7.65% and IFCI climbed 7.18% on strong institutional buying. The metal rally extended for a fifth consecutive day, with the Nifty Metal Index gaining 0.75% and hitting new highs. NMDC led gainers in the midcap space, rising 3.86% to 81.55, followed by Rail Vikas Nigam, up 3.04%, and GMR Airports gaining 2.62%. On the flip side, weakness in IT counters and select financials kept losses in check across the board. Infosys declined 1.49%, Bharti Airtel slipped over 1%, and Tech Mahindra fell over 0.85% amid profit-taking. ICICI Bank and Axis Bank also saw selling pressure, while in the mid-cap space, Coforge took a beating, sliding 4.85% after announcing plans to consider fundraising at a board meeting on December 26. Sun Pharma and Adani Ports also declined, though losses remained contained. The broader Nifty Midcap 100 index remained flat, with 49 stocks gaining against 50 declines, reflecting balanced two-way movement. Support and resistance levels told an interesting technical story today. The Nifty 50 tested an intraday high of 26,233.55 and a low of 26,119.05, establishing a volatile trading range of over 100 points. The index held comfortably above the critical support zone of 26,000, confirming the integrity of the breakout achieved above the falling resistance trendline from prior sessions. Key resistance levels are now positioned at 26,202 and 26,230, with a breakout above this band potentially targeting 26,330, the record high level. For the BankNifty, immediate resistance sits at 59,400 and 493, while support is identified at 59,216. Both indices remained above their short-term moving averages, reinforcing the underlying bullish structure and signaling that dips towards support zones could present accumulation opportunities. Sector performance today showed a clear winner in metals, which extended its exceptional rally. The Nifty Metal Index rose 0.75% and has now recorded gains in 9 out of 10 straight sessions, underlining strong institutional reaccumulation following November weakness. Within metals, ferrous and non-ferrous stocks participated equally, with iron ore and copper benefiting from tight global supply and infrastructure demand tailwinds from India. Banks showed resilience but mixed undertones, with HDFC Bank posting gains while private sector peers like ICICI and Axis faced selling. The Nifty IT Index, however, remained the day's laggard, trading lower as index heavyweights Infosys, Tech Mahindra and Wipro faced profit booking. The sector nonetheless remains constructive on a monthly basis, up over 6% in December as global technology sentiment improves. Pharmaceuticals and automobiles showed mild weakness but remain within consolidation ranges, while discretionary stocks such as consumer durables and automobiles remain mixed as year-end profit-taking persisted. From a macro perspective, the December monetary policy action by the RBI continues to underpin market sentiment. With the repo rate cut to 5.25% and the central bank injecting 1 lakh crore through open market operations alongside dollar-rupee swaps, liquidity remains supportive of growth. The RBI has also signaled that domestic factors including healthy agricultural prospects, continued GST rationalization benefits, and benign inflation remain tailwinds for activity. On the regulatory front, the December implementation of SEBI's derivatives reforms is now in full swing. Effective December 6, index options traders face hard position limits with no grace period for adjustments, and intraday MWPL surveillance checks are being conducted at random intervals. These stricter safeguards are reshaping expiry day volatility and positioning discipline, particularly impacting algo traders and proprietary desks running large-size strategies. The changes, while adding compliance complexity, are aligning India's market structure with global best practices around risk management. On the commodity front, precious metals celebrated another day of record breakthroughs. MCX gold for February delivery traded at 138,381 per 10 grams, rising 1,300.1.05% as safe haven demand and weakening US dollar dynamics support valuations. Gold is on track for a remarkable 70% gain in 2025, positioning it for its best yearly performance since 1979. Silver futures for March delivery surged to 2,15,522 per kilogram, up 2,200 points or 1.03%, continuing its stellar performance. Silver is up an astounding 131% this year. Base metals supported the uptrend, with crude oil trading around $62 per barrel, up from December lows of $59. This provides some relief on inflation concerns but reflects geopolitical tensions and supply dynamics, particularly around Venezuelan oil tanker situations. The broader commodity tailwind supports domestic metal producers and provides cushion against imported inflation pressures. Geopolitically, year-end dynamics remain fluid. The Venezuelan oil tanker situation continues to create uncertainty around global supply chains, while tensions in the Red Sea and general Middle East developments maintain energy premium in crude prices. These dynamics, combined with anticipation of Fed policy clarity from upcoming US data, are keeping markets in defensive mode. Global equities remain supported by renewed AI optimism, particularly in tech stocks where mega-cap momentum has rekindled. However, for Indian markets, geopolitical noise remains secondary to domestic macro management and earnings visibility into next year. Looking ahead to tomorrow's session, technical setup favors continued strength. The Nifty 50 has now completed a decisive breakout above the falling resistance trendline and is sustaining above all key moving averages. A sustained move above 26,200 would invite fresh long positions targeting 26,300. The immediate support at 26,000 remains psychological and strong, and as long as the index holds above this level on closing basis, the pullback toward record highs remains likely. Traders should watch for any weakness towards 26,050 as a buying opportunity. The BankNifty shows similar resilience, and a sustained break above 59,500 could extend gains towards 60,000. On the downside, the 58,800 zone will act as support before any meaningful correction. US GDP and PCE inflation data could introduce overnight volatility, so position sizing and stop losses remain critical. The likelihood of increased quarter-end profit booking also means that rallies may face intermittent selling, particularly in volatile small-cap and financial names. The key takeaway for traders is this: metals remain your strongest secular theme, with institutional buying evident across NMDC, Hindustan Copper and SAIL. Given today's flat close coupled with strong underlying breadth in metals and mid-caps, tomorrow presents a setup for selective accumulation in these sectors on any pullbacks. The flat Nifty close masks strong thematic moves, and traders should focus on sector rotation rather than chasing the headlines. Be cautious on IT software names ahead of earnings season, and use strength in broader metal and infrastructure plays as your trading conviction. Keep tight stops and respect the 26,000 support. A break below would signal a deeper correction. Send in your trading questions and market observations, and stay tuned for tomorrow morning's market wrap, where we will break down opening bell momentum, FII flows, and any overnight global developments affecting your portfolio. Until then, stay disciplined, trade smart, and we will see you tomorrow morning. This is Prem with What Moved the Market. Thank you for listening.